Hi, and welcome to this week's Market Insights, where we break down the key events set to shape market sentiment from the 14th to the 18th of July. Now, inflation takes centre stage across major economies with fresh CPI data due from the US, Canada and the UK. Investors will be watching closely to see whether signs of easing inflation continue and how central banks may respond as rate cut expectations build for later on this year. At the same time, the latest US Producer Price Index, PPI, offers a window into wholesale cost pressures. And as Q2 earnings season kicks off, all eyes are on the financial heavyweights like JP Morgan, Wells Fargo and BlackRock, whose results could offer a crucial pulse check on lending trends, consumer health and investment flows. Let's take a closer look at the data and decisions that could drive the markets in the days ahead. So we start in Canada, and inflation data is expected on the 15th of July at 3:30 p.m. GMT +3. Now, inflation held steady in May at 1.7% year on year, matching market expectations and staying below the Bank of Canada's 2% target for the second straight month. This follows the removal of the federal consumer carbon tax, which helped ease headline price pressures. Meanwhile, core inflation measures, including the median and trimmed mean rates, slipped slightly to 3%, signalling a gradual softening in underlying inflation. However, the Bank of Canada is maintaining its policy rate at 2.75%, pausing further cuts as core inflation remains somewhat sticking. The big question now, will inflation continue its downward trend towards the Bank of Canada's targets? In June, the data strengthened the Canadian dollar. Traders may have considered the data insufficient to warrant further rate cuts, which boosted that Canadian dollar. But will the CAD be supported this time? We'll have to wait and see. And next up is the turn of the United States. And over there, inflation data will also be released on the 15th of July at 3:30 p.m. GMT +3. Now, in May, the annual CPI rate came in at 2.4%, just below expectations, but up from April's 2.3%. On a monthly basis, inflation rose just 0.1% below forecasts. Core inflation, which excludes food and energy, held steady at 2.8% year on year, also below expectations and at its lowest level since 2021. Now, inflation is cooling but remains above the Federal Reserve's 2% target, which supports the idea the Fed will keep interest rates steady at its July meeting, despite lots of pressure from Donald Trump, and markets now eyeing a possible rate cut in September. Now, as inflation came in lower than expected, the US dollar weakened as the market anticipated future rate cuts, though not in July, but in September. So again, it's really important what comes out in this data, but also keep your eye on what is being said by policymakers such as Donald Trump around that interest rate. Okay, now turning to the UK, and the UK inflation data will be out on the 16th of July at 9 a.m. GMT +3. Now, in May, inflation eased slightly with consumer prices index rising 3.4% year on year, which was down from 3.5% in April. The broader CPIH, which includes housing costs, also dropped to 4%. On a monthly basis, prices rose 0.2%. Now, despite the softening, core inflation remains persistent, keeping the Bank of England's policy rate at 4.25%. And markets do expect 2 rate cuts before the end of the year, possibly starting in August. But with continued cost pressures, including rising national insurance contributions, inflation could remain in the mid-3% range well into 2026. So all eyes are on the June CPI report to see if the easing is going to continue. In May, although inflation appeared lower, persistent core inflation supported the British pound. Will that pattern repeat this time? Well, we'll have to wait and see. Okay, next up is the US Producer Price Index, or PPI. The figures will be released on the 16th of July at 3:30 p.m. GMT +3, offering fresh insight into wholesale inflation trends and input cost pressures across the US economy. Now, producer prices in the US rose slightly in May. The PPI climbed 0.1% month on month, recovering from declines in March and April. Year on year, PPI was up 2.6%, showing modest price pressure at the wholesale level. Despite this increase, the Fed is still expected to cut interest rates in September. Will the June report change market expectations? Again, we're just going to have to wait and see. And finally, corporate earnings statements are abundant this week. It's the start of the Q2 reporting season. Traders are braced for some volatility off the back of some of these figures, that's for sure. Three major financial institutions, JP Morgan Chase, Wells Fargo and BlackRock, are set to report their Q2 2025 earnings on Tuesday the 15th of July before the market opens. As we know, earnings results can have a huge impact on share prices and overall market sentiment, and there's going to be quite a lot to digest behind the scenes of these results. And with all the uncertainty around trade policies, it's more important than ever to stay prepared and use your risk management techniques. Well, that's it for this week. With critical economic data, central bank decisions and geopolitical catalysts ahead, traders should prepare for heightened volatility yet again. Stay tuned to FX Open's news and analysis section for real-time updates. Thanks for watching and good luck with your trading in the week ahead. Bye for now.